And tariffs, once again, just dominate the headlines. If you recall last week, we were talking about Trump coming out with his big easel board, talking about all the reciprocal tariffs. It caused the markets to absolutely freak out, believing that we're going to see a total meltdown in the production. We're talking about recession, everything like that, for a total reversal this week. Yes, they still believe that a slowing economy is going to be something that we need to watch out for, but I don't think a lot of traders at this point believe we're going to get the big recession, given the fact that Trump came out and actually paused, if you recall, tariffs for most of the nations except China. Now the big fear turned all the way over to inflation. And what did it do? It caused the 10-year Treasury market to see its largest week-over-week increase since 1981. And what did it do to interest rates? It caused interest rates to see its largest increase week-over-week since 2022, which is the pandemic. Treasuries wreaked havoc on interest rates this week, which was extremely unfortunate, which now leads me to believe is the spring market in jeopardy. And I get it, I say it all the time, real estate is hyper local, but in these markets where you're seeing an increase in supply, you're seeing, our spring selling season, our spring buying season, and now we saw interest rates increase about 0.5 point across the board this week, where we're up close to that 7% range again, if not in the sevens. What is it going to do to a buyer that is already in quicksand, already concerned about what's going on with all the media news that they're reading, everything that's going on around them, all the inflationary pressure, the tariffs and everything like that, and now we're not going to be able to go to them and say, hey, look, interest rates are on the lower side, your purchasing power is really increased. What we're going to have to focus on is the ability to actually, the repricing of homes, and the ability right now for a buyer's market, depending on, once again, where you are, to write an offer at anything you really want. And I don't mean to get absurd or anything like that with your offer, but what I do mean is you have no idea where that seller is at given these economic situations and what is in their headspace. So I wouldn't hesitate to be writing those offers. So that is a concern that I'm going to be watching out for. But one thing that I will say is I believe that the 10-year Treasury is oversold. If I go back and I look at the 10-year Treasury and I look at it what it was when we were at 9% inflation back in 2022, but we did have an economy that seemed to be chugging along, we were at about 3.2, 3.3% on that 10-year Treasury. Last October, we peaked out at about 4.87, almost 4.9%, as we had those growing concerns of sticky inflation. We came all the way down to 4% on Friday of last week, a gift for about 24 hours. And now we're back up to about 4.5. I think we should be sitting about 4.2 to 4.35, possibly, in my prediction. I don't think long-term inflation is going to be a major concern. The good news that we saw this week, and unfortunately it almost went unnoticed, is we had CPI and PPI come out, one of their lowest readings in quite some time. As far as a drop, I mean, we got a negative reading on CPI and month over month. I mean, we haven't seen numbers like that in a long time, and we've been begging for them, and their timing couldn't have been worse. I mean, if we didn't have tariffs and we were talking all about tariffs, we would have seen rates come down significantly. Instead, we saw the total opposite as that major concern of inflation and, dare I say, stagflation creeps into traders' minds. So I believe it's a little bit oversold. And I believe that once a little bit more information starts coming out about what deals are being made with these tariffs, and if we can possibly get some de-escalation with the China tariff war, I think that we're going to see some reprieve in those interest rates. The other thing that I saw is consumer continues to have growing concerns of inflation. Michigan consumer sentiment came out. But is that going to translate into consumers spending less? We saw that over the past couple of years. I, for one, was shooting from the rooftops that the consumer was going to go away, that we were going to see a slowing economy. I couldn't have been more wrong in that category because the consumer just continued to open their pocketbook. The bigger concern this time around is the tariffs with China. If you go around your house and you look at a lot of the tangible assets that are in your house and you look at the tags, a lot of it will say made in China. And that's where that headspace is at, is that the long gone are going to be the days of those low price goods that we import from China. So we're going to have to see how that all pans out. The Dow experienced a bumpy week this week, but finished more on the positive side. No one's really concerned now with a deep recession. Everyone is more concerned with a slowing recession for the economy. Everyone believes that it's going to slow down, but not everyone's concerned anymore with just falling off a cliff. The bigger thing is, are we going to move into stagflation? Stagflation is where we have really high inflation. We have a very slow labor market. We have lower GDP, so slower economic growth. And really, the Fed gets pigeonholed into this box that it can't do anything. That's the last thing that traders are, the real other thing that's pushing traders. Not only is it inflation and higher prices for consumers, it's also now the Fed. The Fed promised at its last meeting that it was still going to do 2 Fed fund rate cuts. That's not looking like that might be the case anymore. I said that they would only be doing 1 in September. I'm probably going to be right. I think that's going to be still, again, around the precise time that they're going to be doing a Fed funds rate cut. But now traders are more concerned with that as well, as we're not going to get the 2 cuts that they thought. Those projections are going to change, and it's only going to be 1 if at all. And that's the other thing that's really weighing on everybody. Again, I think it's oversold a little bit. We just need to see a little bit more information with these tariffs now that we know what they are, now that we know that countries are coming to the table. What does it actually mean for the U.S. consumer? And I'll leave you with this. I get that everyone has a concern on tariffs, but if we're renegotiating a trade deal with a country, we're doing it to be in favor for the U.S. consumer. So in the long run, one has to believe that this is going to be a favorable outcome for us as consumers. Again, the big caveat I get is China, but hey, you got to do what you got to do. And right now, being the superpower in that category, the largest economy in the world, you have to dictate if you think you're getting taken advantage of. Not something that's great. Timing could be off, but got to do what you got to do. All right, y'all, have a great weekend. If you need anything, please do not hesitate to give me a call. My name is Kevin Weedmark, a.k.a. The Mortgage Mouth. Please don't hesitate to jump on that YouTube channel. Give me a subscription. I would greatly appreciate it. I'm dropping content on the daily over there. So if you'd like to be in the know, please don't hesitate to give that subscription. You'll get those videos. But if you need a flyer, you need a pre-approval, you got a client that's got a question, you have a question, please don't hesitate to give me a call. I am always working and would love to answer any of the questions you have. All right, y'all, have a great weekend, and I'll be coming at you with the weekly wrap-up on Monday and another episode of the Daily Dose.